Hello everyone, my name is Khan and welcome to the new video. In this video, I'm going to teach you step by step process that how you can take trade using 15-minute and 5-minute combination. So in this video, I cover everything that how you can trade using 15-minute and 5-minute time frame combination and how many points you need to understand that if market momentum is a bullish and bearish and create any kind of like structure and which point is a more valuable for us for the buy and sell and how you can take trade using a lower time frame anti-model. So many times what happen in market create any kind of like bullish structure in a higher time frame like 15-minute and we are looking for the buy based on 2-minute time frame, and sometime what happen you are not able to trade based on 2-minute time frame because in a 2-minute time frame market create very high momentum up and down side. So if you use the 5-minute time frame combination, then you will get a little bit good setup using the 5-minute time frame and 15-minute as a higher time frame. So I will teach you step by step process that how you can combine both time frame 15-minute and 5-minute time frame. This is our USD JPY chart in a 15-minute time frame, and we can see here that what happening right now. We can say that market momentum is a bullish and creating higher high, and if market momentum is a bullish and creating higher high, generally what we are looking for the taking out the inducement, then market create any kind of like bullish pattern, then we can plan for the buy. But at this time we are using 15-minute as a higher time frame and 5-minute as a lower time frame for confirmation, and sometime we use 15-minute as a higher time frame and 2-minute for the lower time frame. It doesn't mean that the 2-minute time frame is a bad and 5-minute time frame is a bad. No, all time frame is a good, but it totally depends on you that which one is a suitable for you. Like if you are using 15-minute as a high time frame and you are not very aggressive to trade in a lower time frame, in that case you can use 5-minute time frame, because in a 5-minute time frame takes some time to develop a complete structure before the buy and sell. But in a 2-minute time frame and 1-minute time frame, market push higher and lower in a very aggressive way. So everyone is not able to handle that situation. That's why the 15-minute and 5-minute time frame is a little bit good. And you can use also 15-minute and 2-minute time frame. But in this video, I'm going to teach you about the 15-minute time frame and 5-minute time frame combination. And in next upcoming videos, I will teach you the process that 5-minute time frame in as a higher time frame and 1-minute as a lower time frame. They all major time frame will be covered in this series. So now let's back onto the chart, and you can see here that market momentum is a bullish, and market momentum is a bullish. Suddenly we are looking here for the buy after taking out the inducement. If you look at the structure here, so we can see here exactly what happening here. This is our main structure here, and we can mark as a break off structure. So when market get break off structure and taken out the inducement, and once market taken out the inducement, we are looking here for the buy, and this is our previous structure here, break off structure, previous low, previous higher high and higher low, and market taken out the inducement like this one, previous high, and this minor inducement is here, but market taken out this one, and we are looking here for the buy to the upside. Again same thing happen here, break the structure, push downside, and we can mark this in the inducement right here. Okay, but in this case what happened here, market taken out the major inducement is here. And why now this is a minor inducement? Look at this one, because this is a part between this one. So if market broke this one and create any kind of like pullback here, so this act like a major inducement and we can plan for the buy to the upside. But at this time what happened here, this is our internal, and you can mark as a micro structure, internal inducement or minor inducement you can say. So market taken out the major inducement is here, so we can plan for the buy to the upside, but we need some additional confirmation before the buy to the upside. Look at this one. After taking out the inducement, market just sweep this one and push downside, again sweep this one. So if market sweep this one, we can also plan here for the buy. This is our first area when we can expect some bullishness to the upside. So in this case, we can see here clearly if market taken out this one, so we can mark as a PY this one, and we can plan here for the buy to the upside. But I'm not saying that you need to buy here. You can buy here, and the probability is here 50-50% for the buy side, because of the main trend is a bullish and market can be pushed a little bit more downside. But we need some additional confirmation before the buy, which is inducement. Like this is our internal structure, and market create here any kind of like structure like this one, taken out the inducement, push downside, go higher, mitigation, and buy to the upside. So these type of thing if happen here, we can plan here for the buy to the upside. And let's see what happen next after this one, and we can see exactly market taken out this inducement is here, and after taking out the inducement, what happened here? This is our order for last selling move before the buy is here, push downside and mitigation, and we can plan here for the buy to the upside. It means this is our strong zone for the buy to the upside. Because of this one is our taken out the liquidity. Structure is a bullish, everything is a bullish here, and market taken out the liquidity, push upside mitigation, and we can plan for the buy to the upside. And if you are looking here for the buy, this is our 15-minute time frame structure, and we need to switch here in a 5-minute time frame, and then we can refine here 5-minute entries here. And where is the target? Target will be based on the Fibonacci tool. You can set here top to bottom. This is our top to bottom leg here, and 1.618 is our target, and the first entry will be here at this point based on same time frame like 15-minute time frame as a higher time frame. You can take entry here and you will get almost 2.7 RR right here. So this is our first entry here. You can take direct entries here. If you switch here in a 5-minute time frame, because in a 5-minute time frame we can refine into lower time frame, and the risk reward will be increased definitely here. Okay, so this is our lower time frame here, 15-minute to 5-minute time frame. The structure is a bullish here, and market taken out the liquidity is here. Once market taken out the liquidity, that means the everything is a bullish, push higher, break this one. It means we can plan for the buy to the upside based on this order flow is here, and also based on this order block is here. Right, so we have a two possible way here for the buy to the upside based on 5-minute time frame. It means if market came back this point grab the liquidity, push higher mitigation, and we can plan for the buy to the upside. In this case, if you are looking here for the buy, so the stop loss will be below this low, because this area grab the liquidity, and this is a this is our 5-minute structure here which grab the liquidity. So we can plan here for the buy to the upside on this unmitigated order block is here. This is our 5-minute order block is here, right? And the target will be same at this point right here. But in these two entry, you can see in the first one you will get 2.7 R, and next entry is you will get almost 5 R is here, right? So the difference between the risk reward using the different time frame, like higher time frame, lower risk reward. In a lower time frame, you will get higher risk reward, but the probability of the mitigation and the stop loss which will be different, because in a higher time frame of the probability of the mitigation is a higher compared to the lower time frame. And sometimes what happen, market not mitigate your order block and not mitigate your order flow, but market react from your higher time frame PY and reach your target point. So these things happen in a higher time frame and lower time frame. Right here we can see market tap on this order block here, which is our 5-minute unmitigated order block is here. And after that, what happened, market just time to go higher, and again pushing higher high, and finally market reach our take profit is here, right? So this is a process that how you can take trade here. And same thing happen here. We can see here market again break the structure, push downside, again going higher high. And if market taken out the investment, generally we are looking for the buy to the upside again. Like for example, if this happen here, going higher high, taken out this one like this one, and this investment taken out, and again going higher high, mitigation, and we can plan for the buy to the upside. So this process will be applicable in a higher time frame, in a lower time frame, everywhere. And this one is here. We can see here the previous structure is broken right here, push higher, and this is our internal, taken out this one, again going higher high sweep, came back to this point, and we can plan for the buy to the upside. And same thing applicable here, like taken out the investment, mitigation, and taken out this one and go higher. But we are not interested here buy on the top of the structure, because market not react at this point on the PY, right? So we can take risk for the buy because of the market react from the PY. At this point not react from the PY, and we are already almost on take profit area. So that's why we are not interested here for the buy randomly here. We need to buy and sell if market react from the PY, because those zone is act like a high probability. So I hope you understand that how things actually work in a 15-minute time frame and 5-minute time frame. In a 15-minute time frame entry, you will get a less risk reward, but the probability of the mitigation is higher. But in a 5-minute time frame, you will get little bit more higher risk reward, but the probability of the mitigation is less than compared to the higher time frame. In this chapter, I cover all about the time frame, 15-minute and 5-minute time frame combination. And in the next upcoming chapter in a video, I will teach you that how you can use 5-minute as a higher time frame and 1-minute as a lower time frame, because all time frame working, it totally depend on you that which one is suitable and which time frame combination is important for you. And also you can use H1 as a higher time frame and 5-minute as a lower time frame. So the all time frame combination will be covered in this series. So in this video, enough for the day, and thank you so much everyone to watching the entire video. I hope you learn a lot of things, and if you are not understand any key point and what you want in the next upcoming video, you can ask me in a chat section. And thank you so much everyone to watching the entire video. And if you are new, subscribe our YouTube channel and join our free Telegram channel for regular more videos. and join our free Telegram channel, link in description. Go and check out, and I will see you in the next video. Happy trading.